Welcome back to Bazaar Morning Call. Plenty of stocks to talk about. Our entire team is joining in to give us that list. First up, Tata Consumers came out with their numbers. Mangalam is here to tell us how the numbers looked. Mangalam, good morning.
Good morning. So these numbers were not very different from what the street was anticipating, at least on the top line as well as the EBITDA. So revenue came in at around 4350 crores. The street was working with a number of 4370 crores. The EBITDA as well, 667 crores. A little above street expectations of 655 crores as well. The net profit, that came in at 290 crores versus expectations of 326 crores. Anyway, there was a moderation expected because of higher finance costs and depreciation, and that's exactly what happened. So finance costs came in at around 94 crores, depreciation higher, and that is because, one, they raised some debt to fund the acquisitions of Capital Foods and Organic India, and secondly, because of these assets coming into the balance sheet, the depreciation increased as well. In key geographies, the India beverages business grew 6% with 1% volume growth. Again, street was anticipating that. Foods business grew 14% on an organic basis. The expected range was 13 to 15%, and international business too grew 10% versus expectations of 10 to 11% as well. Strong performance coming in from Sampann and salt business. However, Narishco was a weak point in the numbers with a 7% growth impacted by harsh summer. So that's something that we'll be monitoring. On Capital Foods and Organic India, the business did close to around 235 crores in the first full quarter versus expectations of around 210, 220 crores as well. So commentary is that everything is online going forward as far as the expansion is concerned. See some green on Tata Consumer today.
Okay, green on Tata Consumer. Thanks for that, Mangalam. Sonal, what about GAIL? Good set of numbers?
Oh yes, it was a strong set, much better than what the street was working with. It's the fourth consecutive quarter of beat that the company has reported. Revenues were up 4% sequentially, EBITDA up 27%. There was a margin expansion to the tune of 240 basis points, leading to a profit uptick of 25%. Across the board, there was good performance, but major outperformance came in from the transmission and the natural gas marketing segment. The EBIT will come up for you on the screen. EBIT for transmission of natural gas was came in at 1,500 crore rupees. Petchem, however, disappointed this time, where EBIT was a loss this time of 41 crore rupees versus an expectation of a profit. But overall, it was a good set. Expect green on the stock today.
All right, Sonal, thanks very much for that. Indus Tower is going to be in focus as well. Rima is here to tell us why. The buyback numbers. Rima, take it away.
Well, let's start with the numbers then. There is a beat on the company's margins. Margins have positively surprised because the company has reversed provisions linked to Vodafone Idea, and that reversal boosted their margins by 760 crore rupees. That explains why we've seen the margins jump up to levels of 61.6%. However, if you remove the adjustment because of the provisions, then the margins would be on the lower side, and even the tower addition that you typically see on a quarter-on-quarter basis has slowed down compared to the average of the last 4 quarters. But the buyback could support. The board has approved a buyback of 2,640 crore at a price of 465 rupees per share. That's 2.1% of the equity. The release states clearly that the promoter Bharti Airtel is not going to participate in the buyback, which means if it's fully tendered, if the buyback is successful, then Bharti Airtel's stake consolidates above 50%. So that's a positive for Bharti Airtel because they get to consolidate Indus Towers without having to spend any money to acquire that stake. Back to you.
Okay, thanks a lot for that. Well, moving on, Macrotech developers and Navin Fluorine will also be in focus this morning. Sonal is here to tell us why. Sonal, over to you.
Well, let me start with Navin Fluorine. It was expected to be better sequentially, but that hasn't happened. So it was a weak set. On a YOY basis, revenues are up 6.5%, but EBITDA has declined 12%. Margins have come in at 19.2% versus 23%, and profits have declined by 17% as well. It was the specialty chemicals business where we saw a decline this time. So while for HPP, the revenues were up 66%, it did well. Specialty chemicals revenues were down 30%, and CDMO revenues were down 13% as well. So going with red on this one, for Macrotech, we did already know a lot of the operational numbers because of their operational update. If we look at the debt, it has increased on a quarter-on-quarter basis to 4,320 crore rupees. Company says it is because of higher investments that they've been making in growth projects. The price growth has come at 2% sequentially. They've also given their guidance where they expect pre-sales of 17,500 crore rupees, cash flows of 6,500 crore rupees, and new project additions of 21,000 crore rupees in FY25.
Okay, thanks for that, Sonal. Well, Vivek, tell us about Torrent Power.
Well, a good set of numbers by Torrent Power. also aided by the fact that the company ran all of its gas power plants under Section 11. So strong merchant sales was something that the company saw, aided by running plants under Section 11, and also strong power demand actually aided the growth. On a year-on-year basis, the numbers are quite strong. Revenues higher by 23.3%, coming in over the 9,030 crore mark. EBITDA higher by 57%, margins to expanding almost 400 basis points, and profitability higher by 87%. Now, talking about the PLF, thermal PLFs coming in very strong, 60.4 versus 39.6, but you're talking about wind as well as solar PLF, both of them dipped on a year-on-year basis. Segment revenues, generation revenues actually went higher by 65%, and the company said that increased contribution from merchant power sales is something in the gas-based power plants that enabled a strong growth as far as that particular segment was concerned, and also increased contribution from the licensed distributing businesses. Overall, a strong set of numbers aided by running plants under Section 11.
Okay, that's from Torrent Power. A strong set of numbers coming through. Power generation revenues gone up 65%, as Vivek was pointing out. Well, Upasana is with us to talk about Dixon Tech and RR Kabel. Upasana, over to you.
Good morning. Thanks so much for that. First up, let me start with Dixon Technologies. The company reported a strong set of numbers, and the beat was largely driven by company's strong performance in its mobile and EMS segment. Coming to revenues of the company, they stood at 6,580 crores, which was above our poll estimate of 5,325 crores. Company's EBITDA margin stood at 3.8%, which was in line with our poll estimate of 3.9%. Company's PAT stood at 140 crores, which was above our poll estimate of 115 crores. Now, coming to company's key growth driver segment, that is mobile and EMS segment, the revenue saw an uptick of 189% on a YoY basis, and margins also expanded sharply from 2.9% to 3.3% on a YoY basis. Next up is RR Kabel. The company reported a weak set of numbers. The revenue saw an uptick of almost 13% on a YoY basis, while the margins dipped sharply from 7.1% to 5.3%. Now, company's main segment, that is wires and cables, margins dipped by 160 basis points at 7.2%, leading to an overall dip in the margins. Now, margins were under pressure mainly due to volatility in the raw material prices. Coming to company's profit, it stood at 64 crores with a downtick of almost 14% on a YoY basis.
All right. Thanks very much for that. We have the management of Dixon joining us a little later at 9:30. Saurabh Gupta, CFO of the company, will shed light on the numbers and the outlook forward. I mean, of course, their FY25 guidance numbers are very strong, and the Q1 numbers lend support to that overall big view. Well, that's Dixon later, but Star Health also reported numbers, largest standalone private health insurer. Yash is here with details. Yash.
Well, Prashant, I'm going with red for Star Health Insurance because there's a little bit of negative bias when it comes to the numbers for the first quarter. The total net earned premium for the company has grown at 16%, came in at about 3,500 crore rupees. Underwriting profits are down by about 4%. That came in at about 140 crore rupees. And there's not much that has happened on operating profit also, which grew just at about 7%, despite the total income growing as much as 16%. Now, what I'm particularly concerned about here is the combined ratio, which was up 134 basis points, came in at a 97.8% versus 99.14%. And the trend over the last 2-3 years is also concerning. FY23, 95.3, FY24, 96.7, and again now at 99 levels. That's what's concerning, and that's why I'm going with red on Star Health Insurance.
Okay, thanks for that, Yash. Well, I'm focusing on Jindal Stainless. The numbers actually were good, given that pricing is weak. That's why they delivered a degrowth on the top line. But the operating profit came in higher. That's telling you that margins, in fact, did see some bit of expansion. The net profit, though, was lower because finance cost has gone up because they're taking various expansion plans. The positive is the standalone EBITDA per ton in Q4 FY24 got hit because a couple of one-offs with regard to their raw material costs. Now it's bounced back closer to around that 17,400 rupee odd mark. It remains to be seen whether it can get back to around 20,000. So that's a positive, though. And the net debt has moved up, both at JUSL, which is the wholly owned subsidiary, as well as the standalone entity. But as I said, because of the capex they're taking underway, we'll have the management with us exclusively here on CNBC-TV18 at around 10:30 a.m. So you stay tuned to that conversation as well. Well, let's do a quick recap of all the top stocks that we covered. The ones with positive news flow to Tata Consumer, GAIL, Indus, Macrotech Developers, Jindal Stainless, Torrent Power, as well as Dixon Tech. The ones with negative news flow, Navin, Fluorine, RR Kabel, and Star Health. Time to take a snappy break. We come back. Navin is waiting for us on the other side to get some fundamental analysis going.